right, welcome everyone. Definitely a big welcome back to those who attended my recent interactive broker presentation on the butterfly strategy. Appreciate you guys all being able to make it here today. So this is the follow-up session for that. So hopefully you all watched that butterfly presentation. It was basically, we'll do a little recap on that, but I'm certain that most of you watched that. So before we dive in too deep, today's presentation, the A14 strategy, which is unlocking the potential of the butterfly for a 100 to 200% annual growth potential. I do have to go through the disclaimer real quick. Yes, this will be recorded. It's recording right now. So I just saw that really quick question there. All right, so just real quick, got to go through the legal stuff. Aramir Corporation and Amy Meissner are not broker-dealers. The webinars and seminars given by Aramir Corporation and Amy Meissner are for educational purposes only. Options involve risks and are not suitable for all investors. Past performance is not indicative of future results, and this presentation is for personal use only. All right. All right, so let's get started with this. I've been looking forward to this for the last couple of weeks. Again, so this is welcoming back all of the Interactive Broker attendees to the recent Interactive Brokers presentation that I did on the butterfly strategy. And as you recall, in that session, we explored how versatile and powerful the butterfly strategy can be. We discussed the basics of the butterfly setup and some of the most popular variations, such as the broken wing butterfly, and its versatility across different market conditions, and how you can adjust it based on your market bias, such as neutral bias, bullish or bearish. I also highlighted the importance of not only understanding those basics, but also of understanding the effects of volatility, time decay, and gamma on the strategy. And in addition, as I mentioned, in order to master the butterfly strategy, it really requires a complete approach, one that includes risk management and exit rules that are tailored to the specific setup that you choose, which creates basically a complete trading system. So today, I'm going to take you on a deeper dive into how I developed one such approach for a butterfly called the A14 weekly option strategy. And this utilizes one of the most powerful variations of the butterfly called the broken wing butterfly, which we discussed in the last session, and combines these principles into a powerful trading system. So this will include the complete, the system does include a complete risk management and exit rules, not just the setup, etc. So let's kind of dive in. I already talked a little bit about myself in the first presentation, but just real quick, I've been trading since full-time since 2006, trading options, but I started trading in 1995. And I specialize in high probability non-directional option strategies with a goal of either weekly or monthly income, consistent returns, and I like to trade in a variety of markets. So I tend to create things that are can be put on in any market environment as a consistent income strategy. And I also don't like to sit in front of my computer all day. As I mentioned, I live in Southern California. It's pretty nice out here, so I like to enjoy the outdoors. So these are not day trading type strategies, but they certainly can complement them. Again, so I've got quite a few workshops, video courses, alert services, and have done many presentations for lots of different educational trading services. All right, so enough about that. All right, so developing the A14. As I mentioned, this is going to take a deeper dive into how I use one particular butterfly variation in this particular strategy to come up with something that's very robust and consistent. And my journey with this A14 strategy began in September 2020. As you know, that was obviously the year of COVID, and it was a lot of volatility going on. And I wanted to create something new. So I experimented with a variety of different tactics, but I wanted to utilize the butterfly strategy with it, some type of butterfly strategy. And so I experimented over a number of months, a variety of different tactics with entering a trade, managing the trade, like making adjustments, and what the exit criteria should be. And I wanted to create something that was weekly, something that I could do weekly every week, not just uh, um, on a monthly basis. A lot of my trading had been on a monthly basis. And I wanted to also create something that was simple to implement. Again, designed for rapid account growth. That's where the weekly came in. And again, that's where I decided to utilize the broken wing butterfly, which I felt is the most versatile variation of the butterfly, which is one of the ones I showed you in the last presentation over at Interactive Brokers. So again, I started developing different tactics, experimenting with a combination of different trading tactics using a broken wing butterfly. And that started in September of 2020. And over about a 15-month period, I opened up a small account. Over a 15-month period, I actually created about 229% net profit. So that's a little over tripling the account in 15 months. So it was doing what I wanted it to do. And just to go over that real quick, so I opened up this account over at, it was called Tasty Works at the Times, Tasty Trade Now in September of 2020. I just threw in about $32,000. Then I added a little bit more and about $29,000 additional. And by the end of 15 months, I had about $204,000 of trading profit or of total account size. So I grew the account. Here's the math. So I started off with $32,000 and some change here in September of 2020. I added some deposits, took a couple of withdrawals of about 29,000. So really the account size was really about 62,000. And my ending balance about 15 months later was 204,545. So that's more than tripling the account. Total profit, net profit after commissions and fees and everything was $142,437. And that equaled a 229% 15-month profit. And if I annualize that, because that was 15 months, if I annualize that over 12 months, it was about 183% annualized net return. So definitely it was on track to doing what I wanted to do. Now, of course, I had other, strategies that I've developed over the years, and I teach, and I really wanted to share this with my students. But I knew that my more nuanced trading, because I would, because of the experience that I've had over the years in trading, I sometimes would do something a little different than last time. But I had a number of different tactics I would use, but it was a little bit more nuanced. So I thought, okay, that's going to be a little bit difficult for my students to follow. So what I did was I went back and I combined what I felt were the best elements of those trading tactics that I had been using over the last 15 months. And in order to develop more of a rules-based version, as long as it would replicate or similarly replicate the results that I was getting in my own accounts, but with a more clear entry, adjustment, and exit criteria. And that rule set became the A14 weekly option strategy. High probability, market neutral, so I don't have to guess which direction the market's going to go in. Suitable for small or large accounts. As I mentioned, or I will mention in the later on in the presentation, I do have an alert service where I just use a very small $5,000 margin for showing people how I would, I'm putting on minimum size trade each week. But it is easily scalable for larger accounts. I trade it myself today, so that's my main trade that I do in my accounts. And it's simple. It's got a simple entry. The adjustments are pretty basic. And I created it in a way where you don't really have to sit in front of your computer all day. You really only have to check it once a day, unless it's getting really close to a profit target. If that happens, then I'm going to close it at any time of the day. But as far as adjusting the trade and managing the trade, it really only needs to be checked once a day. And again, I wanted to use short-term weekly trades because I wanted to be able to increase the amount of trades I could do, as opposed to my monthlies where I'm trading once a month on a campaign style strategy. This one I can trade every week. So instead of getting 12 trades a year, I can bump that up to 52. That's quite a bit more. So I can grow my account a lot faster. And it was giving me the consistent returns that I like with all the strategies that I develop, 80 to 90% win rate. without having, huge losses that are going to hurt the account. So, and as you can see here, after that study that I did, and in my, I was looking at, here's 2021, again, able to grow the account much quicker using the weekly trades than a monthly strategy. And you can see with this chart, this is just showing profits only. Was able to grow an account very quickly. And as you can see, not a lot of, of course, there's going to be some losses, but they're not hurting the trade very much, and they're easily made up pretty quickly because it's a weekly trade. So basically what happened then after that was I decided to launch the strategy as a workshop. So I created a workshop that I originally did live and then recorded, and that was released in December of 2021. And people loved it. I mean, my students loved it. New people that came on board really loved it. Had a lot of nice praise for the effectiveness that it was having, and lots of requests for my students to learn more, because they knew that I trade more a little nuanced. They wanted to learn, well, this is great, we got all the rules based, but we want to kind of know, like, what other things can we do with this? What other types of tactics can we use to manage it and things like that? What if I miss an adjustment point or things, what other things can I do? Can you teach us what your nuanced trading tactics were that you did when you developed the strategy in the first place? And so what I did was I decided to introduce an advanced workshop to go over all of those nuanced and advanced concepts of the A14. And that was released in June of 2023. And then, in order to provide more ongoing support, I launched the A14 Trade Alert service on July 30th of 2023, so just a few months later after the advanced one went out. So I can have my students that wanted to join that, they can kind of follow along. I can put a trade on every week and tell them what I'm doing, and they can just kind of follow along, and that was all done in real time. So that has been going on since August 2023. And so it's been about 14 months now, maybe 14 months and a week. So as you can see here, since the inception of that service, that particular is a very small, I just do a two lot as a minimum size trade every week to keep things simple. And then, of course, people can do whatever they want with their own accounts. But that's up almost double. So we almost doubled that account with 50 wins, 11 losses. I'm pretty conservative in this account, but a net profit after commissions and fees, which I do include, 98.51% in that amount of time. So not too bad, right? But we had a little bit of dip here in September, but we've made that up pretty quickly. So that's a nice thing. If there is an outsized loss, that does happen occasionally. We've had like two, I think, one early on and then one here in September. They're made up pretty quickly because it is a weekly trade. So, overall, this is a very steady income style type of trading. But you might wonder, well, hey, you got 200, you tripled your account. Why is the alert service account only growing, double instead of triple? Well, that's because in my own personal account, I use compounding, while with the alert service, those trades are done with a non-compounding approach, which what that means is I trade the same number of contracts for each trade without reinvesting any profits in that particular service, because I want to keep things nice and simple. I never know when people are going to, add, going to get new students on, and they're just kind of following along, and then they can do what they wish with that. However, compounding, when used properly, that involves using the profits from successful trades to increase the size of subsequent trades. So by reinvesting the earnings, the growth can accelerate significantly. And that's what leads to the exponential returns over time, like I was able to get with my own account. Now, granted, it takes a while to get there with very small accounts, right? Because you're not going to be able to increase contract size if it's just a small account kind of trying to grow, like a $5,000 account, something like that. But eventually it does get there. And if you have a little bit bigger of account or larger accounts, then it's easy to start the compounding sooner or right away. So just as an example, you can see the difference. So the blue line represents non-compounding, and this is just taking, like, if I were to just use non-compounding with like the trade alert account, is shown in the blue line. Whereas if I was able to compound and increase the contract size or the amount of, margin I'm using based on the profits that I've been gaining and then reinvesting them back into the trade, it can significantly increase the growth. And you can see that by the green line. So it does have a very big effect of, basically it can double the growth the way that I'm doing it. So, and I'll talk a little bit about that in a moment, but I do want to show some examples just so you can see. Now I did show you in the Interactive Broker presentation, I did show you some examples, just like basic graphs of what a butterfly looks like, what a broken wing butterfly looks like, and so forth. But now I want to show you how I actually am using those and what a trade would look like as it was going through the life of the trade, right? So here's an example. I'm sure a lot of you recall, wasn't that long ago, in August, beginning of August, we really had some pretty big turbulence that came up all of a sudden that we hadn't seen in a while, with the big volatility pop and everything. So this is kind of showing, so this trade right here was entered, and you can see that's that broken wing butterfly I showed you, where you have more risk on one side than the others. You have less risk on one side, so it's kind of, but you can see the T+0 line, and then some lines theoretical lines going into the future, out a few days, how profit comes into this trade pretty quickly, but you also have a lot more room than just the expiration tent, right? So in this particular case, this was this year in August 2nd. It was a Friday. I entered a trade. It was a little bit higher volatility because we did have a bit of a down move, as you can see by this, what happened during the day here. And it allowed me to get a better price because remember we talked about how volatility actually increases time, or it also makes for a better pricing. And so I was able to get a pretty good price on this particular trade as I started off on it. But little did I know, the following Monday, we were going to have that huge move down. Recall that on Monday, August 5th, we opened with not only a huge spike in volatility, I think the VIX went from 29 to a high of 64 that day. That is a huge, huge move. And that generally hurts butterflies a lot. It's a negative vega trade, so it really doesn't help a butterfly, even a broken wing butterfly. But because of the way it was situated, and I'll tell you what happened, the SPX actually gapped down 4%. That's a big move. 2% is a big move. 1% is a big move, but 2% is a really big move. 4%, that's a lot. And to gap down, open 4% down, that's something that we really haven't seen in a long time. But that's what happened that Monday. So despite these conditions, and partly because of the way I set it up, even though it was set up as neutral, it is set up to be able to handle downside moves so you're not getting hurt too much. But in this particular case, it was something unusual that happened. This really normally wouldn't happen, and I'm going to show you what normally happens in a downside market. But because it was such a huge move and such a big volatility pop, when I was looking at this trade, first of all, the prices were bouncing all over the place. Huge, wide bid-ask spreads. So, like normally there might be a difference between, the bid and the ask of a complex strategy with this has got 3 strikes in it. Maybe you're bouncing around between, the bid might be and ask might be $1 apart, but you could probably get something close to the middle, right? Mid price. Whereas with this, it was like, multiple dollars apart, but it was just crazy. It was like normally in these kinds of situations, you just kind of ignore it and you go, I'm not going to get filled on anything. But I decided, this is really showing some really positive things here. There might be a chance of getting filled, especially on small quantities, but I had some larger quantities on in my own trades. And it worked fine, because what was happening is because of this huge move and this huge volatility pop that happened very, very quickly instead of just kind of gradually, there were enough people buying and selling the strikes that were there, that were available. Either they were taking profit on previous hedges that they already had on, like in the puts, or they were scrambling to put hedges on and willing to pay up for them. So what happened was it just happened to allow that all these different prices moving around with these different strikes. It just was the perfect storm to allow to get some really great fills. Again, this is not something that would normally happen, especially with a negative vega trade. But even with a negative vega trade in this butterfly, the way we set them up, it's not like it's going to be hurting that much, even on a big move like this. It shouldn't be that big of pain. But in this particular case, I ended up closing out the trade in the alert service for about a 7.15% profit on the margin, which was well above the profit target. And a lot of my students were calling me or typing in the Slack channel that we have for this, that they were reporting much better returns throughout the day. And my own personal accounts, which had much more contracts on them, I was able to get all of those contracts filled as well. So it wasn't just a one-off kind of thing. So it was just kind of unusual, but sometimes something like that can happen. Now, and just, I want to keep in mind, keep the questions coming, no problem. I'm going to answer them after the presentation, so I'm not interrupting the flow, but I'm not forgetting about you. I will answer the questions that I'm seeing coming up in the chat. All right, so what happens in a normal kind of market down move? Let's take a look at that, because that's not something that normally happens, but it was something that happened recently. So here's something that might typically happen here. So here we are, this is in October, or actually this was in September, excuse me, September. So this was last month. So again, started off with a broken wing butterfly and dropped about 40 points, so not quite 1%, a few days later. And you can see that this is a 10 lot. So you can see here, we're not really hurting all that much, but I did feel that it was a need of an adjustment. I wanted to have a little bit more protection to the downside. So I added one of my tactics that I used to add a hedge. It opened up the tent. It allowed for some more breathing room here, added some positive vega to the trade. And then a couple days later, I believe, or maybe that was the next day, we continued the move down. So I added another adjustment to the downside. And again, the trade's really not hurting that much, but I do want to mitigate any issues if it continues to go down, while still giving enough ability to make profit if the market reverses. So here we are now, a few days later, and at this point it's starting to bring in some profits. So I start to it started to move up. I wanted to start removing pieces of the trade. So as you can see here, one of the pieces starting to balance out a little bit more, getting it a little bit more delta neutral. And then by the end of the day, it reached its target profit, and I was able to close it out, actually a little bit more in this particular case, but I was able to close it out. So that's kind of more what a downside move usually looks like. I mean, there are going to be occasions where something happens where, there are losses, of course, but they're made up usually pretty quickly with the pluses that are more often than not. So here's an example of what happens if the market goes up and the volatility goes down. So here's entry again. Now here we go, and this one, I think we moved up like 50 points. And this is, can't remember exactly what the date was. Here we are. This was in 2021. Okay. So, and this one then continued to move up. We're now up 112 points, but because of the tactics that I was using, I have this nice big area where we have profit potential. And in this case, I was able to hit my profit, even though we really had a pretty big move up and I had to keep making adjustments on this. But they are short-term trades, and most of these trades aren't on for more than a week, most of the times less than a week. So those are just a few examples. I'll talk a little bit more about, like, I see some questions about volatility, so I'll talk about that a little bit. But you can see that regardless whether the market goes up or down or stays sideways, it's pretty robust. Again, it's not just about putting it on and hoping. It's about putting it on and then having a risk management plan. So this particular strategy has certain rules in place so that if, if we go up, I want to, keep an eye. I'm going to make an adjustment on it if it does this, or goes down, I'm going to do this. So it does have specific rules in place, but again, they don't need to be watched all day. You can just watch it, and usually those, I don't make those types of adjustments until later in the day. So it's just look at it one time during the day, decide whether I'm going to make an adjustment, add an adjustment, don't add adjustment, and then move on to the next day and wait for that profit target, hopefully, to fill. So I really, as you can see, I really love the strategy. I love butterflies. I love the broken wing butterfly, which I think is the most versatile of the butterflies. And my students love it as well. So I just wanted to share some of testimonials that I've gotten from students for this particular strategy. So from John R., he purchased several courses from me and is re-familiarizing himself with the A14. Absolutely love it. Thanks again for all the help and insights. Chris D says, just want to say thanks for publishing the A14 technique. More than worth the price. I have already made 30 times the cost of the class. I hear that a lot. From Keenan J, the trades you've taught have been performing very well, even in this crazy market. I can't stress how amazing the A14 strategy is. From Bill B, the trade is brilliant. I would highly recommend it. I've recommended it to friends who are pretty new to options trading, and they've had success with it. I'm really pleased with it. Raphael M, it's amazing. The time that I put into this is really minimal. It does average out to be about 7.5% profit per week. Biggest winner was 13%, and I've had a couple of 10% winners every week. I haven't had a loser now for 14 weeks. Year to date, I'm up about $50,000. It's really amazing. This gentleman, I did do a little case study video that's in one of the website landing pages that I'll show you. He actually is brand new to options. He never traded options before. So that was really, wonderful that he was able to follow along and do so well with it. Matthew M says, I had great success with A14 this past year. From Lowell S, I just finished the A14 and the HV7. That was another strategy that I do, and love them both. Thank you. John D says, Amy's A14 strategy transformed my trading approach. The workshops are worth every penny. Amy's trade alerts provide real-time insights that are invaluable and must have for serious traders. So, again, just a few things that people have said. So it's not just a couple people, but I've actually got, quite a few more. So those are just a few that people that have been trading the A14 continue to trade it and have really let me know how much they love it. So that's really wonderful. So I just wanted to share that. So the A14 weekly option strategy, again, it utilizes the variation of the butterfly called the broken wing butterfly. It's set up for a high probability market neutral strategy. So it's a high probability, makes money most of the time. There's no need to pick direction or to be a technical analysis guru. That's one of the nice things that I like about most of the strategies I do. They're non-directional. So yeah, if the market moves, I'm going to adjust it so that it can handle that move, but I don't need to be correct and say, the market's going to go up, so I'm going to set it up like this, or the market's going to go down, so I have to set it up like this. I set it up in a way that can handle the market, whether it goes up or down, or is choppy or stays the same. Again, it's suitable for smaller, large accounts. No need to sit in front of a computer all day. And it's very simple. There's a simple entry with a single order. The adjustments are checked once a day, and they're pretty simple. And then I just exit anytime a target profit is reached. Again, it's a short-term weekly trade, so that I'm able to increase my profit potential throughout the year, because I can put this on every week without overlapping necessarily. Every once in a while, I have a couple days overlap, but for the most part, most of these do not overlap because they're closed usually within a week, within 8 days. So most of the time they're out, shorter periods of time than that. So for the smallest size, the planned capital is about $5,000 to $8,000 for a 2-lot trade. Actually, I've been keeping it around $5,000 per trade in the alert service. So that's, like the smallest. And even with adjustments, I keep it at that level. I try not to go over 5,000 for any one trade. I usually target about a 5% profit or more, and that's based on the margin in the trade, the max margin. Average losses are kept generally under 6%. As I mentioned, occasionally there can be an outsized loss. We have two in the time that I've been doing this for 14 months for the alert service. We have had 2 outsized losses. But both were made up. I think one of them was made up within a couple of weeks, 2, 3 weeks, 2 weeks, I believe. And this last one was a little bit bigger, so it was made up, I think just as of today. So it was kind of a crazy market the last few weeks. So we had a couple trades that made money, but not a lot. Otherwise, it would have already been made up in like 4 weeks. But this one, I think, took about 5 or 6 cycles to make that up. But the nice thing about that is you're not waiting like months to get back there. So you have a nice positive expectancy. And the win-loss expectancy is about 9-1. So pretty robust trade. Now, if you want to take advantage of learning this particular strategy of how I trade the broken wing butterfly, you can go to aramir.com/Amy. And I'll show you in a minute because there's actually a quicker way to get to like a really good deal with bundles. But basically what you get with the workshop, the original workshop that I came out with, is the core concepts of the A14 weekly broken wing butterfly tactics that are used, rules and guidelines for the strategy itself. That includes entry rules, adjustment rules, and exit rules, so you're not feeling lost of what to do. There's several step-by-step examples in all sorts of markets, up markets, down markets, choppy markets, high vol, low vol, that kind of thing. I talk about additional adjustment options that can be used, a few in this particular version of the workshop. And the boxcar is a strategy that was done earlier, so there was a lot of people that were trading that, so I included some, just mentioned that you can use some of the adjustments for that particular strategy as well. And they were recorded live. So what that enabled is the students that were there were able to ask questions, and I answered questions using, during a long enough Q&A session. So a lot of those answers or questions were answered, and they were all recorded. So all of that stuff is still there, recorded, available for playback. So they've held they've definitely held up over time. I mean, they haven't been out that long. So the workshop or the rule set still holds up today, even though the markets have changed a little bit. And then, as I mentioned, I did come out with the advanced concepts and tactics in 2023, and that was a little bit more in depth of different adjustment and exit tactics that can be used with this strategy and adapting to different market conditions as well. So just a little bit more nuanced trading and more tactics that you can use with the strategy. So it's kind of enhances that. And that came with, just detailed analysis of the concepts, a bit of a recap of the rules and guidelines, but not as much detail as the original workshop. So they're good together. And then the advanced concepts and tactics of entering the trade, which included days to expiration, the day and time of entry, strike selection and wing width, placement, neutral, bullish, bearish, if you wanted to go a little bit, have a little bit more bias in the market. The effect of price and time with because of volatility, and hedging at entry at the beginning, if you want to hedge at the very beginning. Adjustments, I'll go through all the different types of adjustments, all of the nuanced types, when to adjust, the timing, why to adjust, whether you're flattening the deltas or hedging for a big move, or you have some kind of directional bias, or a combination of all these things. What type of adjustments? So these are additional adjustments that can be made beyond the original workshop. And again, going over how time, decay, and volatility affect those adjustments. And then different exit strategies, profit targets, when to take a loss. Should you have loss targets? What should those be? How to close the trade, because you do have sometimes multiple pieces, and how to close a trade and leave yourself free lottery tickets. So it's kind of a little bonus there. In addition, I do talk a little bit about holidays, announcements, and news, and how that might affect things. I like to keep this as a campaign, so I just put it on every week, unless there's got to be something really drastic for me not to put on a trade. And then in this particular advanced concepts class is where I really go into the compounding. I even have a downloadable compound calculation spreadsheet, but I talk about how I use compounding with my own accounts to get that exponential growth in my account. There were also a couple of group mentoring sessions I did after the classes were finished. So I let people kind of absorb all the information. We came back and we did 2 different group mentoring sessions. Those were recorded. There's a private forum that you can talk to other A14 subscribers with. And again, all these classes are and mentoring sessions. They're all recorded, available for playback, including the compound profit session with a downloadable spreadsheet. And then finally, the A14 Trade Alert service. What we use for that is a private Slack channel that enables us to get like really fast, like it's immediate, because these are real-time alerts. So it's very fast. You can have it on the web, you can have it on your mobile device, whether you're using Android, whether you're using an iPhone. It's immediate. You get the notifications right away. And you don't have to wait for them. It's not like, SMS, which can be very slow depending on what service you have. So it's very quick. And what's nice about this is I'm doing trades every week. So every week I put on a new trade and we follow it through. And it's in real time. Here's the entry. Here's the, this is what I got. Here's the adjustments. If it needs an adjustment, this is what I'm doing. This is what I got. It's all done in real time. If I'm going to exit it, there's commentary. I had additional commentary if I'm thinking about things. Sometimes I'll even throw in a little video. And there's a really great supportive community of active traders. There's quite a few people in there. And so there's a general channel for them to talk. It's all, it's in a private Slack community. So only people that are subscribed have access to it. But there's a separate channel within that private community where you guys can talk amongst each other. And there's some really great people supporting each other, sharing different ideas, things like that. So it's really, really nice. And again, all of that can be found at aramir.com/Amy, or you can go directly to aramir.com/A14 bundle, because we actually bundled these up to get a better deal. So I'm just going to go through that real quick, and then I'm going to answer all of your questions. So let's go to the website real quick. So if you go to aramir.com/Amy, it'll just bring you to this page. That's an old picture of me. It talks a little bit about me, and then it shows you all of the different things that I have, all the different workshops and services I have here at Aramir. And the first top three are obviously based on the A14. There's a couple of other things you can learn about, and just click, learn more, and that'll dump you into another page. Usually there's a video about it, a little more detail. So if you want to learn about the other two strategies that I have on here, you can learn that as well. But the nice thing about this, so you can go into each one of these and learn a little bit more. It shows you like the original launch. So I talk about it maybe in a little more detail there, the advanced workshop, and then the alerts. But if you go directly just to the alerts, that actually takes you to aramir.com/A14 bundle. So I'm going to just put that in there. And A14. I'm just putting this in the chat real quick so you have the links there available. But the nice thing about this particular page, even though it says it's only talking about the trade alerts, once you learn, you do want to be involved in these. The alerts are really only available to people that have purchased the workshop. So I want you to learn the strategy before just jumping into the alerts, because it's going to just be more beneficial, and it's more fair to the people that are already in there that know the strategy and that are trading it together. But there's some more testimonials here. There's a couple of case studies you can look at. But the nice thing about this page is like these first three, this is adding another strategy in it, but these give you some really good deals on bundles. So instead of paying like, the full price for each workshop and everything, you can actually bundle these together and get a really good discount. So instead of, you're saving, I don't know, like 40% or something like that. I'm not sure if that's exact percentage, but it's close to that, something like that. So, anyway, so you can see here, you can get the original workshop with the alert service, which is a monthly service, but you have the first month included in the price here, and then it's $129 a month after that. You can do the advanced with the alert service, or you can get both workshops with the alert service. So if you want to bundle things, you can do that really nicely here. If you just want to bundle the workshops and not have the alert service, then you can just go to Aramir, Amy, and I believe you can go to the advanced one, and at the bottom there's a little button to bundles. It's a little confusing. We're going to try to combine all these together to make it less confusing for people, but it just allows you to get the bundle of the two workshops. So instead of spending, like $900 or whatever, you get quite a bit of a discount there. So just a couple of ways to do that and get some more information here. So, so now let's just go into the chat here. I'm going to look through here and I'm going to the questions. And I'm going to answer this last question really quick. So Lindsay says, I've already taken the workshops. Can I sign up for the alert service without the bundle? Yes, of course. Since you've already taken the workshops, if you're already a workshop student subscriber, then all you got to do is, log into your Aramir member site. And then, so let's just go there. So if I go to Aramir, and under my stuff, you'll see whatever one you have. Let's say you have the A14 weekly strategy, and you're not going to see it on my page as I've got everything, but you'll see like a blue button. I can't remember if it's on the left or the right. I think it's on the right, and it should say add alerts or upgrade to alerts or something like that. And you can click that button and it'll automatically take you to the page where you can just add the alerts service because it knows that you're already a workshop owner. So that's how you do that, Lindsay. So I'm going to go back and go through the rest of these questions. All right, let's go here to the beginning. Recording, yes, this is being recorded. All right. What attributes of this trading approach do you feel contribute to its continuous profit curve? Okay, so two different questions. Since IB rise hurts butterflies, should we avoid them when we expect IB to rise? So the reason I feel that this is a contributes is because it's a complete trading system. So it's not just putting on one structure like the broken wing butterfly, which is very versatile and it's very robust. It can handle a lot of different things. But at some point, if the market moves too much, it's not going to make a profit necessarily. So you have to, you might have to do something to, help the trade, adjust it, add a hedge, that kind of thing. So the workshop and the A14, what the strategy does, it's a system that shows you not only how to set the entry up for the best results for this particular strategy, but also how to make adjustments to it as the market moves to allow the trade to bring in profits. And that's what that whole system, that whole approach is what allows it to have a nice continuous profit curve. And that's also in answer to your question about IV, since IV when implied volatility rises, it does, if you just have a butterfly on a long butterfly, it's a negative vega trade. So when volatility rises, it generally kind of squishes, pushes the profit down. So he's asking, should we avoid entering these trades, I guess, when we expect volatility to rise? So I'm going to answer that in two ways. One, if volatility is spiked up, then that's a great time to enter one because you're going to get it for pretty cheap. So that's one thing. But let's say you're already, you want to get in one, but you think volatility is going to rise afterwards. I still put them on because I think, if volatility is going to rise afterwards, then I'm going to hedge it with one of my adjustments based on the criteria in the course for that system. And usually that does the trick. I'm not going to try to guess how much the market's going to move or so forth. But let's say you are really good with like maybe technical analysis and you have a really great track record of figuring out where the market's going to go and how much volatility is going to rise. And that's great. I mean, if you feel really comfortable with that, you can always set these up to have a little bit of bias as well. So but for me personally, I don't avoid entering them. I mean, very rarely would I avoid entering them. On occasion, I might wait like a day, like if something big is coming out, but for the most part, I just put it on. Also, I could put on a hedge at the beginning as well, but most of the time, I feel comfortable putting it on regardless because I know that if something happens, that's what am I going to do if the market moves down? What am I going to do if the market moves up? What happens if I have a loss? Okay, big deal. I'll put one on next week, and it probably won't take much longer based on the performance to get that. And like I said, I've been trading this since 2020. So when we had very high volatility, we finally came down and down and down and down. And then we were kind of lower volatility. And then now we've been having a few spikes here and there. And it's been resilient through that. But I also did go back and I did a back test to, make sure I felt comfortable with different trading environments, whether they're low, super low volatility, like what to do and things like that. And that's actually, I do talk about that in the workshops, what to do if the volatility is really low, how do I adjust the position to deal with that? So that's actually something that I do go through in the course as well. Michael's asking, now that we have daily expirations on the SPX, would you consider establishing on end of day for closing the expiry of the following day? This particular strategy is not meant to be that short trade. I can do, I think the smallest, the lowest DTE I've used on this strategy has been 3 DTE, but usually with an additional hedge at the beginning. And usually that's only done during maybe high volatility markets where I can, it's giving me the time back, so to speak. In the lower volatility markets, usually the 14 days is the maximum I'll go. But generally, anywhere between 7 and 14 days, I prefer, maybe between 10 and 14 in our markets that we're having now. And yeah, so it's just not really set up to be a strategy for following day expirations. There's not enough time to make adjustments. So that would just be a different type of strategy. Nothing wrong with it, just not the A14. So here's saying, can you show an example of what the trade would look like if volatility is very low and the butterfly is narrow and then priced far out of the tent? I can find an example for you. I'm trying to think if I had that in another. There's been plenty of times that's happened. I know that I've show that in the course itself. There are examples of low volatility. Let me see if I can just find one really quick. And if I can, I will show it. Otherwise, I can tell you that, there are changes that I do make to handle that. And it's shown in the workshop. Nope, I don't want to do that. It's not it. Try to follow this. See if there's an example of that here. Mark it down, choppy. No, I didn't show it there. Mark it down, let's see. Mark it up, is this a narrow one? Nope. No, I didn't have a low volatility. I can't remember which presentation. If you go to YouTube, you might be able to find like one of the presentations I did on A14 where I did talk about a low volatility one. I just don't have one that I can pop up right now, and I only have a certain amount of time for this presentation, so unfortunately I didn't have one to show you right now, but it is, like I said, it is covered in the course. Okay, so since the risk on the fly would seem to be on the bearish side as IV rises, have you tried breaking the wing on the opposite side? I don't on this. It can be done, but this particular strategy is actually, it's hedged in a different way. So if there is downside, if there's a downside move, I just utilize different types of adjustments to deal with it instead of reversing it, because most of the time the market moves up and it can move up pretty sharply, and prices are skewed better to the downside. You get a better pricing on some of the puts. So I prefer doing it with the more risk on the downside than the upside. I know it sounds kind of counterintuitive, but just because of the way the market works, and I feel comfortable with the downside hedges that I do. Hi, Amy, there is more risk and adjustments required with the strategy compared to the AIC 22 question mark, as both look more bullish. I guess A14 return more. So the AIC 22 is a monthly strategy that I developed a while back. That's also a strategy that you can purchase. It's not based on a butterfly. It's actually based on an unbalanced iron condor. It has a completely different hedging strategy. It's just different. I suggest I wouldn't say, I would say that it's a monthly strategy, so you can't grow the account as fast. It does have the ability of making the ability of being able to make a big profit or even a nice profit in a huge crash. Because of the proactive nature of the adjustment. So it's just different. Um, it's just different. It has built-in hedges from the beginning. It's based on an unbalanced iron condor. It's a monthly strategy. So it's just a bit different. But both, it's a great strategy. I would say that, a lot of times that one might be, it just depends on your personality. I think it has more to do with personality than worried about profit and risk. Of, how often you want to put on a trade and watch it and things like that. Year 2022 was extremely challenging. How well did this strategy work during that period? Well, it worked pretty well. I actually, let me see, did I do a 2022? Well, you guys are making me dig for this stuff. I don't know why I wasn't prepared for that. I thought I saw 2022 somewhere. Let's go here. Nope, come on. 2022 performance presentation. Here we go. Let's see. Here we go. So we had the one outside loss, but it was up, so we about an 88% win rate. And this was, okay, this was year to date. So this was through, oh, that was only for the first couple of months, but it ended up being a pretty big winner. If for compounding in my personal accounts, I was up well over 100%. But it hit, with non-compounding about the same range as it hit this year. So it was very, it was a challenging year, but because we still had some decent volatility, that actually helped, because on entry, I was actually getting really good prices. So some things I'm going to have to add to these presentations. So you guys are coming up with some good questions of things that I'm going to have to look for future presentations. So thank you for that. Is straddle strategy similar to butterfly? No, the straddle is when you can either buy or sell the same strike, but without the wings. So it doesn't have the wings. Butterfly has the wings. So you're adding the hedging with the wings, where the straddle doesn't have wings. You're just dealing with the middle strikes, with the short strikes, or you could buy them as well if you think the market's going to go up. So let's see, Lindsay, I've answered that. Would PM account help margin wise compared to Reg T? I only look at, I wouldn't care if I had a PM account or not. I only look at Reg T. I don't feel comfortable adding on that risk. I don't know. Some of the tactics that are used, I'm not really, every broker's different, so they margin differently. So you'd have to check, but I find that, I want to know what my Reg T is with this. And I feel that that's good enough. I don't want to over leverage. Are the courses for lifetime, or is there still a monthly charge? The workshops are for, I guess, lifetime, as long as, Tom has the Aramir website up, which I'm sure he will. The alert service is a monthly service. So it's live. So it's real time. So that one is a monthly service. But the courses, if you buy the workshop, you can go back in and watch it as long as you need to. Can someone develop their own trades after taking the workshop, or is it necessary to also purchase the alert system? I got a lot of traders that, start with, as any strategy, they look at it, I do the same thing, and then they come up with their own tweaks of, oh, like I've got one gentleman that instead of doing it every week, he puts one on Mondays, Wednesdays, and Fridays. And sometimes they're overlapped, and he just likes to, do it that way, so that he kind of distributes his funds across it, in the market can be in different positions on those days. So there's lots of different ways, or some people make it a little bit more bullish because they might feel a little more bullish or bearish. So yeah, it's the nice thing about it is that it teaches you, the rules. The original workshop is basically just structured on the rule set. It depends on how, experienced you are a trader too, how far you can take it from there. The advanced concepts give you more ideas of other things that you can do, so then you can take it further. Going to the alert service, you don't need to do it, but the nice thing about that is you got that, group of other traders, and they are helping each other out. Like, hey, I did this, I did that, or what do you guys think about this? Oh, that's interesting. You know, they'll try different things and they'll share their successes and failures or whatever in the private Slack channel there. So it's kind of nice. You don't have to, but you can always, again, you can always, you know, with your smarts, can come up with different ways of training it. But I definitely give you a lot of ideas in the advanced concepts workshop. Okay, I'm going to answer a few more questions and then I have to run in about 5 minutes. So I trade options, but really simple strategies, usually selling puts and calls. Do I need to have more technical knowledge to buy the workshop? They're still very simple, but you might want to, you know, there's lots of free courses that you can take online or just watch some YouTube videos of putting on a little bit more complex, like maybe a spread, like, you know, learn how to enter and exit a spread strategy. Again, like I mentioned, I do have a lot of people that start and they've, you know, never even traded options before. And all of a sudden then they're diving right into this strategy, which is, you know, maybe a little bit more complex than just buying and selling puts and calls. But they're, you know, picking it up pretty quickly. So it's nothing, you know, super difficult, but if you're not used to entering a trade as you know, multiple strikes where you enter it as a whole trade. So you're not like, it's not like you're going out and you're buying a put and then you're selling a call and then you're buying two puts and selling two, that kind of thing. You're just putting it on as one order, but it'll have three legs. You know, butterfly has three legs. It'll have the wings and it'll have the center strike. So it might be a little bit different, but you might want to learn a little bit about or practice that a little bit before you buy the workshop if you feel like you need it. But there's lots of free help for that out there. I think you probably pick it up pretty quickly if you've been doing that for a while. But for sure, you know, make sure you feel comfortable with at least buying and selling spreads and things like that. Because if you understand how the Greeks work and things, it's not something where you have to watch the Greeks, but if you understand how everything works with just a single put and call, you can kind of understand maybe how it works a little bit better with when you do a spread. You're basically just hedging the puts and the calls that you are buying or selling. So okay, so that's a few more. Volatility keeps rising. Do you just keep widening the spreads? Also, if prices keep rising or falling in a strong trend, what do you do? If you're neutral, that's all in the course. You know, at some point, if it gets to the point where you know, the market moves a certain way and I've already made some adjustments and I look and I see, okay, I need another adjustment because the market kept moving in that direction. And if I look at that and I say it's not really helping the trade, then that just might be a losing trade. But all of that is covered in the workshop. So you can't, you know, always turn every single thing into a profit, because you don't want to take on too much risk just hoping that the market's going to do what you want it to do, right? But it can, you know, even though it's set up in a neutral stance, it can handle some, you know, moves to the upside and downside fairly well. With this course, can we learn options from zero and then learn the butterfly? This course is just the A14 strategy itself. So it's not starting from zero. So that's, again, you probably want to, you know, find maybe some free courses out there. I know there's some things at Aramir. There should be some things at Aramir where you learn just like some basics. Options 101, I believe, is something. Shoot me an email at Amy at if you have some more questions, I'm going to just put this, Amy at aramir.com. You can also shoot Tom an email, Tom at aramir.com. If you have any additional questions, or if there's something that hey, do you have a course on this that you know, we can send you the links for, like, here's just options 101, and then you feel more comfortable, and then you can start taking the more complex strategies like this one. Advantages, benefits of interactive brokers. Actually, I don't trade using Interact. I used to, but not as well. Tom was more versed with it. A lot of people from different countries use interactive brokers because some of the like Schwab and when it used to be owned by TD Ameritrade and Tasty Trade may not, I'm not saying they don't, but they may not accept people from out of the country. I'm not sure. But you know, the interactive brokers is a great platform. But they probably can tell you a little bit more about what the benefits are of trading with them, and, you know, definitely do your research of what you feel more comfortable with. Some, you know, they all have different pros and cons. But the thing that I look at the most is, yeah, I want to save money on commissions and things like that, which that reminds me of something else. I got a special for you on commissions. But also, if you, um, if you want to feel comfortable with the platform that you're using, so you feel comfortable putting on a trade, and maybe it has a mobile app that you feel comfortable trading with, and you feel comfortable trading with with your with either the web app or the application that's on your computer as well. So it's the one that you feel most comfortable with and you like using, that gives you, the most benefits. And then secondary, I would say, would be like, commissions and things like that. I do have some specials that we do for commissions for people that are my students. So if you do become one of my students, you shoot me an email, and I will let you know, like, what commission specials there are for, different things like that. So that as well. So anyway, let me just give you my emails for everybody. And it looks like those are all the questions. Thank you so much for joining. It was really wonderful that everybody came on. And again, this is recorded, so if you want to rewatch it, hope to see you guys in my classrooms sometime soon. And have a wonderful, wonderful evening.